Good morning, everyone. Thank you for joining us for today's webinar, What is Life After Coronavirus? HR Scenarios and Common Questions, presented by Ray & Associates, a top 100 regional CPA and business consulting firm with offices across Ohio. My name is Imani Fields, and I will be moderating today's presentation. Before we get started, there are a few housekeeping items we would like to cover. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. When you receive this email, you will also receive the recording of today's presentation, as well as a link to participate in a very short evaluation. Please take a few minutes to share your thoughts about the presentation as a whole, the information provided, and our presenter. Your feedback is important to us as we determine future webinar topics related to the current COVID-19 crisis. Also, if you'd like a copy of today's slides, you will find that they're available in the handout section of the webinar dashboard on your computer screen. Please note that the resources presented today are for informational purposes only. Ray & Associates does not provide legal advice and will not make management decisions for your organization. You are encouraged to consult with legal counsel of your choice prior to implementing any policies or procedures within your organization. Today's webinar will be given by Darlene Finzer and Renee West. Darlene Finzer, a principal and director of later life planning services at Ray & Associates, has more than 30 years of experience in the accounting industry. Darlene specializes in assisting organizations with the legacy family planning retirement readiness, financial fitness, and fiduciary responsibility. She has also been featured in several publications, including Benefits Pro and Thompson Newsletter. Renee West is a senior manager and leader of Ray & Associates HR consulting practice. With more than 27 years of experience in human resources, Renee specializes in assisting organizations within the manufacturing, nonprofit, contingent staffing, food, and other industries with their HR challenges. She is also currently serving on the Ohio Society for Human Resource Management's Board of Directors as Central District Director. Today, Renee and Darlene will hone in on the updated regulations and policies such as the CARE Act and Shared Work Resources, and address specific HR scenarios and common questions businesses are facing in hopes of providing you with the guidance you need when it comes to tackling this really tough situation. And now I'll pass it on to Darlene.
Thank you, Imani. Good morning, everyone, and thank you for joining us today. Today marks 93 days since the first case of the coronavirus appeared in the U.S. And what a tumultuous 93 days it has been, hasn't it? While it appears that we are flattening the curve in Ohio, we are still waiting to see a decrease in the reported cases of the virus. The bright spot for today is that tomorrow, I believe that we will be receiving word from the governor about what the plans are to start reopening businesses. With that, we will get started with today's presentation. Today's topic is headlined as HR Scenarios and Common Questions. Renee will be presenting many of the common HR-related questions that we have been receiving that are directly related to unemployment or unemployment, as the case may be, a little later on in the presentation. Because we are hopefully going to have the opportunity for employees to return to work in the near future, Renee will also be sharing some content regarding best practices for safely returning to work. This morning, I wanted to share with you a couple of provisions under the CARES Act that, while not directly employment issues, does have an effect on you and or your employees. If we could go to the next slide, please. To start, the stimulus checks are in process, and many of you may have already received those payments. I heard of an individual who withdrew money from the ATM, and when his receipt printed, it showed he had $8.2 million deposited into his account. And he looked at that and he actually made another withdrawal just to see if the receipt would yield the same result. This deposit error, much to his chagrin, was corrected within minutes. So while not $8.2 million, know that generally the stimulus payments are $1,200 for an individual or $2,400 for a married couple. If you haven't already received your stimulus payment, know that the IRS has until December 31st of this year to actually provide those payments, although I know that they are working to get those out much sooner than December 31st. For those individuals who have their income tax refunds direct deposited, The IRS is using that information and depositing the stimulus checks into those accounts. If you don't have direct deposit for your income tax refunds, or you haven't received your stimulus payment and would like to attempt to expedite the process, the IRS has created a website for you to input your data to allow the direct deposit of the stimulus payment into the account of your choice. And that site is listed on this slide. If we could go to the next slide, please. Switching gears a little bit from individual to small business, the $2.2 trillion CARES Act contained a $349 billion small business loan program known as the Paycheck Protection Program, or PPP for short. The rollout for this program was so quick that even the banks, with only a couple of days of advanced brief guidelines, were not entirely prepared for the rollouts. Because of the overwhelming demand for these funds, the program funds were estimated to be depleted by April 17th. Well, we didn't quite make it to April 17th, as the banks were informed on the evening of April 15th that the funds had already been depleted. Congress has been, quote unquote, discussing terms of infusing more money into this rapidly depleted Paycheck Protection Program. And those discussions started even before the initial funds were depleted, because they were aware that those funds were going to go very quickly. The initial proposed boost from the Senate was a $250 billion program to be allotted to inject money back into this payroll protection program. There was a 2-week stalemate as the Democrats requested certain other provisions to be included in this replenishing measure. So as of this past Sunday, the White House and congressional Democrats settled on a $450 billion economic relief package to replenish the depleted Paycheck Protection Program, with a few extras attached. Reports earlier this week indicated we could be seeing a vote by the Senate on Monday and by the House on Tuesday. Well, we know how that works. As of yesterday afternoon, the Senate passed a $484 billion deal. That agreement includes $380 billion for small businesses, $75 billion for hospitals, and $25 billion for COVID-19 testing. This bill is set for passage in the House yet this week, maybe as early as tomorrow, but we'll see. I hope that you were lucky enough to have received funds through the Paycheck Protection Program, but if not, know that there is a second wave of funds that will be made available, hopefully here in the near future. And with that, we would like to introduce our first polling question. Abby, if you could please share that first question. So our first polling question is asking if you are planning to apply for this additional coronavirus relief stimulus. There are 4 options there, and we'll give you about 30 seconds to get your vote in, and then Abby will share our results.
Darlene, it's Imani. I'm going to read the results. It sounds like 51% says no, I received proceeds from the original PPP program.
That's great. I'm glad to hear that we have such a high percentage that actually received funds from the original program, because as fast as the money was depleted, we were concerned that our clients were not going to be able to access the money that they needed. So it's great to hear that so many have actually been able to do that. Okay, if we could go to the next slide, please. With respect to the Paycheck Protection Program, I wanted to touch briefly at a fairly high level on the loan forgiveness provisions of this program, as there have been many questions that have been posed in regards to this. I first want to mention that our RAY team hosted a webinar last week that was dedicated entirely to the small business loans and the loan forgiveness. For an in-depth review of that topic, I encourage you to watch the webinar on demand, which is available through our COVID-19 Resource Center located on our website, and you'll be provided with that information later on in the slides. As the name implies, the primary purpose of the Paycheck Protection Program is to keep employees on payroll or to return employees to payroll if they were laid off. The secondary purpose of the program is to assist businesses with cash flow during this unprecedented time. While revenue streams may have dwindled, businesses still have fixed costs. The Paycheck Protection Program also takes these fixed costs into consideration in terms of how the funds may be used. So the program has an 8-week measurement period tied to the forgiveness portion. Any funds not spent during this 8-week measurement period will not be forgiven. This 8-week period begins when the loan proceeds are received. So therefore, it is important to note that you can delay receipt of those funds for up to 10 days from date of approval of the loan. Delaying the receipt of those funds is important if you have employees who have been laid off, as delaying the receipts of those funds will give you time to actually rehire those individuals. Again, the primary purpose of the program is to keep employees on or return employees to payroll. Therefore, there are measurements that will need to be taken to ensure that the program funds are being used as intended. As noted on this slide, at least 75% of the program funds need to be used for payroll costs. I will comment that if you utilize credits under the Family First Coronavirus Response Act, FFCRA, for sick and family leave wages, those costs are not included in payroll costs for the payroll protection program. So please keep that in mind. It is also important to note that even if you spend all of the program proceeds on the proper expenses, and you'll see listed on this slide the acceptable use of the loan proceeds, the forgiveness amount may still be reduced if one of two situations exist. So the first situation is if you have employees who are earning under $100,000 of compensation, if they are not paid at least 75% of their regular rates during this 8-week period, your forgiveness amount could be reduced. The other situation where the forgiveness percentage could be reduced is in regards to average full-time equivalents during the covered period, so this 8-week measurement period. If your full-time equivalents do not equal or exceed the average monthly full-time equivalents during the pre-pandemic measurement period, and there's a couple of different measurement periods that you can use for the pre-pandemic full-time equivalence equation. I know this is a little bit confusing and it's hard to describe over a webinar, but to give you an example, if your full-time equivalent ratio during the covered period represents only 90% of your full-time equivalent ratio during the pre-pandemic measurement period, then 10% of the total amount of paid expenses is lost for forgiveness purposes. So just know that there are requirements, there's restrictions that you need to be aware of as you go through the calculation of what actually constitutes the amount that will be forgiven under this program. The best that I can tell you right now is, for those of you who have received these funds, is to track your expenses during this 8-week measurement period. So the 8-week measurement period is from the day that you receive funds 8 weeks out. The SBA is slated to provide additional guidance regarding the loan forgiveness, and they are slated to do that by the end of this week. There's several questions about specific situations, and there's contradictory information that's been provided under the various sections of the CARES Act, which has caused the confusion of knowing how to actually calculate the amount of the forgiveness. So hopefully the information that comes from the SBA by the end of this week will help to clear that muddiness of knowing how to actually calculate that forgiveness amount. Ray does have a template available to help calculate the loan forgiveness amount. This template, however, is continually evolving because of some of the unknowns that we're hoping will be answered sooner rather than later. Also know that after June 30th is when businesses can apply for forgiveness. So we do have some time to figure this out, to figure out what that calculation is. But my word of caution to you right now is just track how you are spending those dollars. The forms and the process of how to apply for the forgiveness is not yet available. I just encourage you to keep checking our COVID-19 Resource Center, and as soon as information is available, we will post it there. If we could go to the next slide, please. Also under the CARES Act, is the Federal Pandemic Unemployment Compensation Provision, FPUC. Okay. Under this provision, the unemployment benefits are vastly expanded. Under this provision, the 1 week waiting period to collect unemployment benefits that is typically imposed has been waived. In addition to the state unemployment benefit, individuals are eligible for an additional $600 a week, even if this additional amount results in the employee receiving more in unemployment benefits than what was received while on payroll. Kind of counterintuitive, but that's the way it is. So the federal pandemic unemployment compensation also extends benefits for an additional 13 weeks to allow individuals to be eligible for this benefit for a total of 39 weeks. The other unique part of this provision is that it is extended to those who are typically not eligible for unemployment benefits, such as self-employed individuals. If we could go to the next slide, please. I thought it may help to put in perspective what the Ohio Department of Job and Family Services has been encountering from a logistics standpoint in offering unemployment benefits. So prior to the pandemic, the call center included 42 individuals on their payroll. The call center now employs almost 1,200 individuals, and the department is still looking at the need to expand those numbers. In the past month, the department has had more unemployment claims than they had in total over the past 2 years. So we couple that with the Department of Labor not publishing guidelines for the new federal pandemic unemployment compensation benefit program until April 6th, at which point the Department of Job and Family Services actually needed to build a program or a website to be able to accommodate the new benefit program. I know the process can be frustrating, but I encourage you and your employees to practice patience, something that we have all had to do as we have been attempting to maneuver this new landscape. It does appear that progress is being made in this area, and I wanted to share the latest timeline data that we currently have available. According to Lieutenant Governor Husted, by the end of this week, the Department of Job and Family Services should be in a position to begin processing the federal pandemic unemployment compensation benefits for the employee population. So those who are receiving the state unemployment benefit should now be able to start receiving this federal funding. I'm not certain whether these will be included in the state unemployment benefit checks that individuals are already receiving, or whether the federal checks are going to be separate, but just know that payments are on the horizon. Also, by the end of this week, the online early application process is slated to be available for those self-employed individuals to apply for these federal unemployment benefits. Note that these applications will not begin to be processed until the middle of May. But rest assured, the benefits will be paid retroactively to the time eligible for the benefits. So we still have a little bit of time before those benefits will be paid to the self-employed individuals. Next slide, please. I know that there are several different credits, programs, and appropriations that have become available resulting from COVID-19, and trying to navigate the various options can be a daunting task. However, I felt that we would be remiss if we didn't take a moment to at least mention supplemental unemployment benefit plans, commonly known as subplans. This may be another option for you to consider. A subplan is a tax-exempt plan that is used to maintain income for unemployed workers while providing cost savings and alleviating a potential cash flow crunch for the employer. The cost savings are achieved because under this plan, the separation payments are treated as benefits rather than wages, and therefore they're not subject to payroll taxes. The amount of the benefits paid by the employer under a subplan is offset by the amount the individual is receiving in state unemployment benefits, and in light of COVID-19 is also offset by the amount of the federal pandemic unemployment compensation benefit. These subplans, while during a situation like this one that we are currently facing, may seem more valuable, but they can be utilized at any time, not just during a crisis situation. Ray does not administer these types of plans, but we do have a business relationship with an organization that does, and would gladly share that information with you if you were interested in learning more about these plans and whether it would be a best fit for you to establish such a plan. If we could go to the next slide, please. So this gives you an example of the math behind a sub-plan. Under the first line, it shows no separation benefits. You will see that there is no cost to the employer, and the only benefit that the employee is receiving is what they are receiving in unemployment benefit. If an employee is offered a severance benefit, this is where the employer tries to offer a severance wage to the employee to try to help them out. And you'll see that the benefit to the employee obviously is reduced by the amount of taxes, and the cost to the employer includes the employer portion of the FICA taxes and the FUTA and SUTA. Under a sub-plan, you'll see that the benefit to the employee is what their base amount is, what their full wage would be, the $12.50, but the actual cost to the employer is only $6.80. So that in a sub-plan situation, the employer is supplementing what the individual is receiving under unemployment benefits to get them to their full wage amount, essentially. So the last information that I wanted to share with you today is in regards to an ask that Governor DeWine made to the Ohio Bureau of Workers' Compensation. So on April 8th, Governor DeWine asked Ohio BWC to pay dividends to employers this spring as another way to ease the financial impact affecting Ohio businesses. And a mere 2 days later, on April 10th, the Ohio Bureau of Workers' Comp Board of Directors approved such a dividend to be paid. The amount of the dividend will equal approximately 100% of what employers paid in policy year 2018 premiums. So the governor announced yesterday that these dividend checks have started to be sent out, and they are all expected to be sent out throughout this week. So please be watching for that payment to be coming to you in the mail either this week or next week. And with that, I would like to turn the presentation over to Renee.
Thank you very much, Darlene. We appreciate your time and your providing this valuable information. Good morning, everyone. And as Darlene mentioned, there's been a lot of movement in the regulations and next steps. And part of what I wanted to review and share with you today is now employers are actually starting to need to document and the implementation of these requested leaves. So we wanted to talk through and provide you with some resources and also some scenarios for some common questions that we've received throughout the last few weeks. In reference to the Families First Coronavirus Response Act and leave, some of the best practices that we want to be sure that we share with you is the retention of any of these request leave forms. The Department of Labor has provided guidance to employers for them to retain these request leave forms and documentation for at least 4 years from the date of the leave. So that leads us then to the next question of ensuring that your company has the ability to document, looking at resources for you to, do you have a leave request form that your employees can complete? And have you provided your employees with the required notices of the new policy, the ability for them to request the leave, and also ensure that you have the workplace postings in place as well. And a big piece of a lot of this is the policies and ensuring that they're consistent and that, again, employees are aware of them. Next slide, please. Part of a lot of the questions that we're receiving is what type of documentation is required if I have an employee that comes to me and says, I need to be off leave due to being diagnosed with COVID-19. So basically, as you know, doctors' offices right now are trying not to have individuals come into their offices. The documentation, if employees are able to obtain that from their doctor, that is sufficient. Also, verbal notice or from a family member or documentation, from their doctor that there's the need to quarantine. And also on the second bullet point here, you'll see a reference to the IRS site that actually provides further information on what additional info would be needed. For example, if an employee is looking to request leave to take care of their child. So please visit this site, and this does provide some resources for you. And we've also received a very common question of, do I as the employer need to tell an employee they need to take this leave? the Department of Labor has stated that employees need to request the leave themselves. That is their responsibility to do. And as far as the employer, yes, if you're aware that there's a leave situation, you can also help to, again, notify that employee that it is important for them to complete the paperwork and show them what their options are. That's a very important piece. And at this time, we'd like to take our next poll question, please, Abby. So the next question that we have here is going back to the policies. Has your company's employee handbook been updated within the past year? Yes or no?
Answer is 55% no.
I'm sorry, Monty, I couldn't hear you.
They answered 55% of them answered no.
Okay, thank you for sharing that. Thank you everyone for answering that question. Again, just a very important piece of as we move forward to ensure that those are updated, and we have resources to help you do so. Next slide, please. So another big question and a big, which is a good thing, some employers are actually starting to recall employees back to work that were previously placed on unemployment. And as Darlene mentioned previously, the increased employment compensation has provided an opportunity for some individuals to actually make more staying home versus coming into work. So what can an employer do? An employee who is currently on unemployment and who is recalled but refuses to return can be subject to unemployment compensation fraud. This is a national issue as employers, again, as I mentioned, are beginning to recall some workers. So let's talk through a best practice or some best practices of what to do in a situation such as this. Next slide, please. We have a number of best practices here that can assist you in having that conversation with an employee that you are letting them know that it's great news. We are recalling individuals back to work and we would like to have you return to work. Number one, the employer should verbally inform the employee of the need to return and the expected date for them to return. Another best practice is the employer should also provide a written recall letter stating the employee is being recalled to work that also includes the expected return date as well. And this can be on your company letterhead. Next slide, please. This letter should be mailed to the employee's home or sent certified to ensure documentation of the recall. And the reason that you want to provide this documentation and provide this follow-up is in the event that you have an employee that says, I am not coming back to work. I'm going to stay home. I can make more. It's summer. It's going to be nice out. This documentation that you can show will be sent to the unemployment office to ensure that that eligibility for unemployment stops on the date that you are able to recall that individual back to work. So the employer, as stated in number 4, will want to be sure to send a copy of that letter should the employee refuse to return to the JFS job site listed there. Next slide, please. And I'm sorry, if I could back up one more slide. The biggest piece of this is also to ensure that you're following the eligibility criteria for administration of leaves as well. So it's important that if you have any questions in reference to having a problem possibly with an employee not coming back in, we also request that you do, of course, talk to your legal counsel. These best practices are what we feel can help you in these situations, but also rely on other alternate sources to ensure that you can move forward. So let's talk through some common questions that I've had with a number of individuals we've been speaking to through our SHRM group and just also local employers as well. And one of them is, may I collect unemployment insurance benefit for time in which I received pay for paid sick leave and or expanded family and medical leave? And that question is no. An employee is only able to either collect unemployment or, if they're currently working, would be eligible for any type of paid leave under the new regulations. So those two are totally separate, and we have listed a site here as well for your reference, but this is a very common question that we're seeing. This question is one that relates to an employee that has already been on family medical leave, which, if you remember, is the original family medical leave policy since March 1st of 2020 due to his own serious health condition. So since they're already off on family medical leave, do they qualify for the new leave? And that answer at this point is no. Any individuals currently off work on the original FEMLA need to remain based on their continued eligibility and authorization from their physician. Also keep in mind, previous FMLA regulations allow for 12 weeks of total leave. So that is also important that's tracked accordingly. The employer can require employees to utilize any paid time off prior to FMLA or emergency FMLA, correct? And at this point, that is incorrect. The guidelines state that the employer may request that or may inform the employee that you do have paid time available. However, there is a provision that states that you are not permitted to tell them they have to take that. Now, that could change down the road as these regulations kind of move forward, but a lot of individuals need to ensure that they're articulating this correctly to your employees for that time of leave where there might be an unpaid portion. Let's take time to do another poll question. Poll question number 3, does your employee handbook contain policies for dealing with layoffs, pandemic, and emergency events? Yes or no?
Looks like the answer is 78% answered no.
Okay, thank you very much for everyone answering that. And that's very common. We're hearing throughout the nation that a number of employers have realized that, we've always talked about, we really should have, emergency crisis or a pandemic policy in place, but who would have ever thought that we would need to be there? So again, moving forward, we do see a lot of movement on companies looking at that and also incorporating more of a guideline around if there are staffing reductions and layoffs, also what that looks like. So thank you for answering that. This is another question that we've received a lot. So how do employers with collective bargaining agreements ensure compliance with the FFCRA leave? And, we put a couple bullet points here that organizations can satisfy obligations under the Emergency Paid Sick Leave Act by making contributions to the multi-employer fund, plan, or other program that's in accordance with your existing collective bargaining obligations. Contributions must be based on the hours of paid sick leave to which each of your employees would be entitled under the Act based on each employee's work under the multi-employer collective bargaining agreement. And continuing on with that question from the collective bargaining agreement, there's a couple more points. Such a fund, plan, or other program must allow employees to secure or obtain their pay for the related leave they take under the Act. Again, an employer may satisfy its legal obligations under both Acts by ensuring they're making appropriate contributions to fund, plan, or programs on the paid leave that would be owed to each employee. This is another question that we've heard, and also one nationwide that is being very popular. Are married employees working for the same company able to request Emergency Family Medical Leave Act at the same time? And I know you've never heard this before, but yes, this is a vague area in the regulation. It currently states an employee is able to take leave due to a need for child to care for his or her child. The Department of Labor now states that a best practice is up to the employer, where they may decide to split the 12-week leave between both parents. As you could think, this could be a very touchy situation that employers want to be sure that they are handled correctly. And this is also one that a best practice is to consult legal counsel regarding this particular type of leave when you have this situation to ensure that you are following it correctly. Again, there's a vague guidance, but leaving it up to the employer. The consistency is ensuring that if you're doing this for one particular type of couple, that it's consistent. And again, that legal counsel can help you ensure that. So we've received a lot of questions on the 6 criteria for emergency paid sick leave eligibility. It's vague, and I've had a lot of inquiries as to how do we know if it's covered. So if you look at what that criteria is on the leave eligibility, it says if an individual is experiencing another substantially similar condition specified by the Secretary of Health and Human Services. So what does that mean? You read that as an HR professional and you think, okay, I'm not a doctor, so I need some further guidance on that. The interpretation in some future COVID-19 conditions, again, there's research on this, and we do expect that there will be continued guidance from the Department of Health and Services. Again, this is yet to be identified. Therefore, it's a best practice that an employer does not need to grant leave based on the criteria for number 6 at this time. Again, if it's something that you feel is questionable from a legal perspective, we also request that you talk with legal counsel on that until we do have some further guidelines. As employers start to recall individuals back into work, obviously we are all concerned to ensure that our employees are safe, that they feel safe, that our customers are safe. And a question is, can an employee refuse to return to work based on fear of contracting the COVID-19 virus? They're not sick. They don't have something from their doctor that states they're at risk. They're just scared. So per OSHA, employees are entitled to refuse work if they feel imminent danger. Now, that's a very broad definition. There's a site that we've listed here that goes through and provides information on an employee's right to refuse to return to work. This is a whole other discussion that if this were to occur, talking to your BWC office locally as a resource would be helpful. As we move forward, there's the question of, okay, if I have an employee that's coming into work, can they say that I was at work and I contracted the virus while I was at work? Is that covered by BWC? So these are ongoing discussions that we'll be having and further regulations coming out. But per OSHA, this is the most up-to-date information that we have. So please take some time to review this. As we talked about, employees starting to return back to work, and, the employer's focus on safety and being compliant with regulations, both from the CDC level and overall just workplace safety. Employers should continue to focus on providing safe workplaces for their employees and customers, and that can include a number of best practices. The guidelines that we've put here as a resource for you, employers can look at the CDC guidelines in reference to social distancing. We've listed the sites that provide some handouts and posters for the social distancing definitions and what that looks like in the workplace. Also a CDC site that talks through the face mask and PPE. As we move forward through the next couple of days, we do expect from the governor's briefings further guidance on, what is a requirement for PPE and face masks, further guidelines from employers so we know that we are prepared for individuals returning to the workplace. Other part of, obviously, the safety of the employees is the continued cleaning and sanitation of workplaces, and this is a CDC site for employers to utilize that provide a lot of best practices, resources for your employees, opportunities to set up checklists to do internal cleanings. And, your goal is to, again, reinforce with your employees that you as the employer are taking active measures to comply with safety regulations, that you care about their safety, you care about their well-being. It's okay to go ahead and continue speaking to this. This is going to be here for a while. So the more that we can reinforce and help our employees feel safe, that's what we should be doing. As we move forward and talk through, there are so many resources that are out there, and I've tried to impose the fact that it's important that you look at factual information. Ray and Associates, we have a COVID-19 resource center that is a resource for you where we provide very up-to-date and current information on regulations throughout the industry. So please take time to look at that. We did talk through and mention the Governor DeWine and his daily briefings. A lot of information is shared and will be continued to evolve as we move forward through the next couple days and weeks. These are traditionally held at 2 p.m. each day and can be accessed via this channel here through Ohio Channel. They have Facebook, a number of different options for you. The Ohio Department of Health site is there as well. CDC site is listed for you. We also have SHRM, the Society for Human Resource Management, that is an option and talks through a lot of policies and procedures. And as we talk about safety and we start to move forward with ensuring safe workplaces, we've cited the OSHA site here as well that also has information for employers. The unemployment site is another one. As Darlene mentioned, there is a lot of updates going on, new hires to this particular segment of the business, and we'll continue to evolve and try to work through the kinks of the system, but they are trying their best to move forward and help as quickly as possible. We've also listed the Department of Labor on here and also the IRS that has the information about the paid leave and the documents for those accordingly. So a lot of information, and again, it's best to continue to try to stay up to date, and that's what we're here for, to help you kind of talk through that and any questions that you have as well. And at this point, I think we have one more poll question that we'd like to go through, and then we're going to open it up for some questions. Poll question number 4, do you have the internal resources to ensure compliance with layoff recalls and processes? Yes and no.
The answer to the poll is 69% answered yes.
Thank you for sharing that, and thank you for answering that, everyone. I know there's been a lot of learning on parts of a lot of us as we've moved forward through these times. Again, we are here as a resource for you, and I believe we're going to open it up for some questions now.
Thank you, Renee. And any question we're not able to get to today, we'll be sure to reach out to you because we have a lot of great ones. So the first question I have here is for Darlene, and how are employee wages factored into PPP loan for those that choose to stay off the job unpaid versus working during this time? All of our employees are still able to work. However, a couple have elected to forego pay to remain sheltered in place.
So I think that the answer to this question, and we'll verify this, but it is calculated on actual payments made. So if it is a cost that is incurred by the employer, it would be included in that payroll cost. If there is no cash outlay by the employer, then that would not be included. As far as calculating like the full-time equivalents, we are still waiting on information related to how that calculation is to be made. So, hopefully we'll get some additional guidance on how to make that calculation and to factor in those types of employees. So just continue to check our resource center, because as that information becomes available, we will be including that. We'll also be updating our loan forgiveness template as that information becomes available.
Okay, thank you. And then the next question I have here is for Renee. It says, what date does the 10-day window for employees who are off for childcare? I assume, what date was that began?
That actually was effective with the April 1st regulations when the leaves went into place.
Thank you. And the next questions I have here are for Darlene. It's kind of like a 3-part question, so I'll start with the first one. It says, we have a payroll protection loan and want to make sure that we can turn it into a grant. Do workers from an outside temporary company count toward my active employee number?
So yeah, so if you're using a PEO, there is a factoring in of those employees. They realize that that is not going to be reflected on your Form 941s. So there is a provision to allow for including those individuals in the calculation.
And then the next part of that question is, our sales are way down. If we have to cut hours, not more than 25%, does this fulfill the portion of compensation levels that are meant to be maintained? Do we have to keep our level of employees at our designated number all through the next 8 weeks, or just by June 30th?
So the time period is over the 8 weeks. Again, it's going to be looking at those full-time equivalents, pre-pandemic versus current pandemic, or while we're under this 8-week period under the pandemic. So that will play into the factoring. For whoever asked this question, I would suggest that you reach out. We take a look at your specific situation and determine what the numbers look like to be able to have that portion of your loan forgiven. Because we want to work with the employers as much as possible to make sure that as much of that loan that you've received can be forgiven.
Thank you. And the next question I have here is for Renee. It says, we had an employer resign after receiving the PPP payment. How will this affect us?
That is a good question. So my understanding, and Darlene, if you could clarify if I'm speaking correctly, that termination on accord of the own employee that should not affect that total staffing requirement. Is that correct?
I'm not sure that I heard the question, so can you repeat that just so I can clarify?
Sure. It says, we had an employer resign after receiving the PPP payment. How will this affect us?
Yeah, so there was there's questions and answers, like frequently asked questions and answers regarding if employees are actually terminating on their own versus, being terminated by the employer or laid off or whatever the situation is. So if it is an employee decision, that is one of the questions that we are still waiting for the SBA to clarify in making the calculations for the full-time equivalents under this 8-week period. Because obviously if it's an employee choice versus an employer choice or an employer action, not necessarily a choice if, business is slowing down, but we need clarification because obviously that is out of the employer's control. And if they could keep that employee on payroll, they would have otherwise. So there has to be some concessions there. It's just we don't have clarification on how that calculation looks right now.
Thank you. And the next question I have here is for you, Darlene. It says, do you have to retain 100% of your FTE to receive forgiveness?
I don't believe that it's 100%. There is, again, in the calculation, and because there is so much that goes into the calculation, it's easier to go through the template and make that calculation. I do not believe it's 100%. It just has to be, the majority. And offhand, I can't tell you what that percentage is. I'm thinking it's 75, but I would need to clarify that by going through the template.
And I believe that the next question may kind of go into that. It says, do we have to maintain both payroll levels at 75% of PPP loan and the head count?
Yeah, so I think both of those are at 75% for the forgiveness portion. You do have to spend 75% of the loan proceeds on payroll, and I believe it's also 75% that needs to be maintained in order for the loan forgiveness to be valid.
And the next question I have here is for Renee. It says, as we recall employees, we may only bring them back for limited hours. Do you have a formula that we can use to determine how much they can earn and still be eligible for unemployment for reduced hours?
I would suggest that, yes, there is a source on the JFS website for employers that you can go into and click, and there's input. You can put input data to kind of show what that would be. So that's the resource, and they would have to go into the employer section of that page to do that.
And then we're going to answer 2 or 3 more questions. The next one I have here is for Darlene. It says, we have not needed to lay off any employees. If an employee leaves on their own, resigns, will this affect the forgiveness to the loan since our amount of employees have reduced? We have not needed to lay off any employees. If an employee leaves on their own by resigning, will this affect the forgiveness to the loan since our amount of employees will have reduced?
Yeah, again, I think this goes back to the full-time equivalence number, and that is something that we are still waiting for SBA to clarify, is when an employee leaves on their own.
Thank you. And then the next question I have here is for Renee. It says, an employee was off from a doctor's slip before the April 1st CARES Act. We paid him 1 day. He came back to work. Does he get unemployment, or do we pay him for the time lost prior to April 1st?
There would be a couple clarifying questions that we would need to determine. Is the doctor's release related to the leave, or is it, if it's not, and he's just returning based on the doctor's note to come back from an unemployment perspective, that we would need to look at that a little bit further. If you could have that individual contact me, we can look at that and be sure we have all the criteria to answer that correctly.
Last question here Can interest spent on equipment loans already in place be used for the forgiveness? I always just see mortgage interest, and this could be for either of you.
Yeah, so I think that is one of the questions that we are still trying to ensure that we have the right answer to. I know that there are questions out there in regards to what loan interest qualifies. We believe that the interest that is deductible is mortgage interest on real and personal property. So equipment would be personal property. Again, hopefully we'll have clarification to ensure that that the proceeds are spent properly for the forgiveness.
All right. Thank you, ladies. Any questions that we didn't get to, we'll be sure to reach out to you. We have your emails and your questions. Thank you for joining us for today's webinar on what is life after coronavirus, HR scenarios, and common questions. We hope the team was able to provide you with some valuable insight that will help you make sense of the current government recommendations stemming from COVID-19. If you sign off today and realize that you have additional questions, you're always welcome to reach out to Renee and Darlene directly. You can also contact any of our RAY team members by clicking on the People section of the firm's website at www.raycpa.com, and that's REA. Don't forget to watch your inbox for an evaluation survey, access to the recording of today's webinar, and more. Thank you again, and we hope you have a wonderful rest of your day.